Let's talk about candlesticks and how powerful these formations can be when you trade any market. In this case, I'm going to analyze the pound card and also probably a couple of stocks. So candlesticks are very important, okay? Candlesticks will tell us about the psychology of all the market participants in a certain time frame, a certain span of time. So here, for example, on the pound card, the pound versus the Canadian dollar, British pound versus the Canadian dollar is the weekly time frame. Every single candlestick represents a week of time, okay? So we can see that there are like strong impulses over here, and then there's a rally over there, and then there's a strong impulse there. Pound card is probably bound to do this in the following weeks. But regardless of that, this video is going to talk about candlesticks, and that you will learn that probably you know that, but you haven't seen examples explaining it this way, okay? So the thing is that a candlestick alone is nothing or means nothing unless you have context, unless you put that candlestick into the context of the bigger time frames or some obstacle or where we are expecting price to react. So here we've got, if we read price action over here, we've got like an engulfing pattern. This candlestick here, let me enlarge this. The black one to the right of the green one, that's a dark cloud cover or bearish piercing pattern. Then we have these, I don't remember the name of it. It's not a hammer, but it's a shooting star. It's not a shooting star either, it should be black, but probably a hanging man. I don't know, it doesn't matter. What matters is not putting names to candlestick patterns, but to understand what it implies, okay? When we see this large engulfing pattern, and within this structure, we see now the bearish piercing pattern or dark cloud cover, and then we see this reaction, let's call it shooting star. I mean, very large wick, that is telling us, hey, I'm going to do this. I'm going to drop, okay? That's what it's trying to tell you. So you need to put this into the context of what the bigger time frames and the price action to the left is telling you. But on top of that, if you are aware of what an imbalance is, okay, a supply level is an imbalance, okay, an area that is comprised of a proximal line and distal line from which price or to which price will retrace, and from there it will start to drop. Okay, that's a supply level. It's not a resistance level, which is usually one price. Okay, here we're talking about an area, a range. Okay, and if we zoom out a little bit, we are going to see to the left a very strong impulse that became an imbalance, and that happened in February 2022. Okay, if we draw the level here, this is what happens. Okay, so price drops and stays away from that level for many months. Okay, and after a long time, in July 2023, the stock reaches the strongest imbalance after this one at the top here, a few months before. It reaches that imbalance, and from there it drops. And when it reacts to it, it is telling us, hey, this is very strong to ignore. Okay, and price drops heavily, prints a low before the previous large candlestick body, and creates an engulfing pattern. There. And then it tries to rally and it tries to print a high above this reaction, and it ends up creating a piercing pattern or dark cloud cover, followed by that large pink handle. Like I said before, it's not a shooting star, but it's got a name when the body is white. But it doesn't matter, okay? It doesn't really matter, okay? If you know what's going on, I mean, if you know the psychology of this, you know that the supply level is in control, and this is bearish price action. This is also bearish price action plus more bearish price action. This is like telling us, hey, I'm pushing down. I am going to tank in the following candlesticks, regardless of the time frame that we have. In this case, this is the weekly time frame. This could be 1 hour time frame, 1 minute, or like 2 years time frame. It doesn't matter. It's irrelevant, okay? Because price is fractal. So we're going to see the same structures on different time frames and different assets. It repeats over and over, okay? So price drops on there, okay? And after price drops a lot, we are expecting a correction, okay? But we're not going to talk about this, why this is happening. We're going to talk about this. And then price retraces all the way up there. This is another supply level, okay? Retraces all the way up there. And what happens? Look at that. We've got spinning top over there. Large upper and lower wick after a very strong rally, and then that's telling us, hey, I'm going to drop. And that's exactly what happened, okay? So if you are unaware of these strong imbalances, like this one that was originated back in 2022, and you are unaware that that imbalance from so far back in time, you might be thinking, why, how is that even possible? How can price react to that? Well, there are rules for that, okay? And these can be predicted with months in advance, as I always say. We can predict with supply and demand analysis and price action together what's going to happen to price with weeks and months in advance. Disregarding fundamental analysis, news, or the price of money, GDPs, or the unemployment rates, FOMC, and all that. We just don't need that. Okay. Now the Canadian bank changes the price of the interest rates, blah blah blah. It increases or decreases. It doesn't matter. Okay, we've got a strong supply level. So what's going to happen is this. This is what's going to happen. And if we wait a little bit to confirm, we're going to see, okay, now we've got bearish price action, and again bearish price action, and again bearish price action, okay? And what if we look at the daily time frame, which is the most common time frame used by a typical trader? If we go to the daily, okay, over there, we're going to see something similar. So when price reaches that imbalance for the first time, over there, as you can see, bearish engulfing pattern, and then price drops. Then it creates another rally over there, and then it bases for 3 candles, and it drops again, and then bearish engulfing patterns, and then it starts dropping without control. Okay, it's just happening like that. Okay, so now the daily is rallying again. This is very poor price action, and probably the pound will go higher. And I expect this to happen, okay? We could see anything happening, obviously, but this impulse here is not an imbalance. This one over here is an imbalance. So that's the difference. So this is just an impulse on the weekly time frame. So what I'm trying to say is that candlesticks are great, but you need to put them into context. A candlestick happening in the middle of nowhere like this one could imply that price could do this, or it could rally into the supply level, which is what it finally did, okay? But a bearish candlestick or a multiple candlestick pattern happening as a reaction to a very strong imbalance, that is context, okay? Context, location. So this is happening at the right time, at the right moment, and in the right place. So the bearish price action is happening right where it has to happen. It's not happening here. Look at that. It's happening. This is not an imbalance. So it just blows through that high. This is not an imbalance. This is a bearish impulse. So it blows through it. This is an imbalance, and it doesn't blow through it. Sometimes it does, obviously. But then we see the bearish price action. And this is for the pound CAD. Let's take a look at another example I analyzed recently for a long-term type of trade for Cassava Sciences stocks. This is a biotech company trading in the New York Stock Exchange in America, NASDAQ, sorry, exchange. So here, this is what we have. Let's take a look at the daily time frame over here. So when we see this on the daily time frame, okay, these candlesticks are rallying very strongly. They're again very large candlestick bodies here. The impulse is very, very strong. Okay, so when price rallies over here, and then it drops to this is an imbalance on the daily, right there. Okay, more or less. So when price drops into this imbalance, you can see now what's going on. You can see that we have new bullish price action as a reaction to this strong imbalance. So if this was not there, imagine, okay, try to use your imagination. Imagine that this formation, okay, happens like here instead. We are not allowed to buy. Obviously, it could rally strongly. When this happens over here as a reaction to an imbalance, that's great. Okay, that's great. Price tried to drop down there. It didn't do anything. It just dropped, but it couldn't. Okay, so we take a look at the weekly time frame. Okay, so this is what we've got. We've got price rallying over there, very strong rally, and then it starts to drop because there is an imbalance here in the weekly time frame and also on the daily. So we need to put context and candlesticks into the context of bigger time frame. So why is cassava rallying? As explained in another video, it is because we have a very strong imbalance on the monthly here. Okay, over there, right there. Sorry, it is right there. That's what's going on. Okay, so price is rallying because of that. So in the context of that, okay, when you looked at the bigger time frame, at the smaller time frames like the weekly or the daily, you're going to see this. Why is that printing now an engulfing pattern? Okay, so now another engulfing pattern. And if we go to the daily, we are seeing like new strong impulses like these ones that I mentioned. This one over here, this one over there. It's mentioned in another video. You can review it on the YouTube channel. And candlestick alone are nothing, but when they happen at bigger time frames like this one, this is an imbalance on the daily. Price drops and creates this here. Okay, this is like I think this is called a morning star. So a harami followed by a legging, very large bodies, and then the large bullish candlestick in the middle, the spinning top harami or morning star. It's a single basing candle followed by a large legging and a large leg out. Large candlestick, okay, single candlestick. So that's how I believe it's called. I might be wrong, but I believe that's what I remember. Okay, but it doesn't matter. I mean, you just have to read price action. What's going on here? This is being formed. This is another valley is being formed, another swing low. Okay, and then very strong move, and then you can see now the rejection. Okay, this is large upper stick, the upper shadow, followed by bearish price action until it drops after a couple of weeks and it hits the proximal line of that imbalance, which is already trying to play out. It has rallied already from there to there like 17 or 18%. So what I'm trying to tell you is that candlesticks alone are nothing if you don't put them into context. And if you put them into context with supply and demand or against supply and demand, that will help you tremendously. And if on top of that, you put it into the context of several time frames, doing multiple time frame analysis, that will increase the odds of any scenario happening, price dropping or rallying, depending on if it is bearish bias or a bullish bias. So pay attention to that, because you don't need to get crazy or obsessed reading all kind of books about candlestick price action, like Steve Nison's, many others I believe that are out there. You just need to know the basics, okay? Otherwise you're gonna get lost in hundreds, if not thousands of combinations, because there are thousands of combinations. There may be this type of candlestick formation is got a name, and this right like that, or like the three white horses, or the three black crowds, or I don't know, there are so super weird names that have been assigned to certain formations. So don't get crazy, because they are not that often, and they are not that useful when we are expecting a retracement or it is reacting to an obstacle. The important thing here is obstacle. Okay, we need obstacles. So you can use support resistance, you can use supply and demand, you can use whatever you want, but it has to be an obstacle. And when there is an obstacle in one time frame or multiple time frames, then you see bearish price action or you see bullish price action, then that's usually a sign to go with the direction, or okay, with the help of that obstacle, in this case demand and bullish, okay, we can say, let's go long, okay? So if you like this video, okay, click on the subscribe button at the bottom of the screen, click on the bell so you are notified of other videos. Hopefully this will help you understand a little bit more about the markets and candlestick formations. Have a great day.